In yesterday's video, we had a look at buying tops and selling bottoms, but a lot of people want to do the opposite, but they don't because perfection hits them. A lot of people stay out of the market until they are certain. When they're certain, they pop into the market and hope and pray. To avoid coming into the market at the wrong time and coming out of the market at the wrong time as well, ditch the idea of perfection. Perfection means inaction and losses. When prices are recovering, people don't think to get in then. They want to have certainty. And certainty inside financial markets means losses, contrary to what you're taught everywhere else. The reason that we don't seek tops or bottoms is because it's largely, absolutely and utterly irrelevant. That's because price is always moving in a wave-based function. The top today could be the bottom tomorrow and vice versa. What really matters is the directional correlation, the momentum, and the association between different charts. In this video, I'm going to give you a bit of a cheat sheet on the markets. It's going to help you tremendously. Let's run the numbers. Hi everyone, I'm Ken from CryptoTradingKS and the CTKS Method. If you're new, a very warm welcome and welcome back CTKS family. My goal is to assist you to become more of a financial and emotional blessing to yourself and those you love. When we looked at the futures in yesterday's video, we saw Bitcoin was coming down, and that pretty much meant that Bitcoin was sniffing out risk-off sentiment inside the market. If you had projected that prices would have been coming down because Bitcoin itself was coming down, you did really well. Don't forget, we're after directional correlation, which is a little bit different to normal correlation. Now, what we're seeing at the current time, we've seen a bit of a sell-off, we're seeing a little bit of a rebound, and we're keeping our eyes on Bitcoin. How much will this retrace? Will it go 50%? Will it go 100%? Will it go way, way less and resume down, or will it gain momentum and go up? When it comes to not worrying about tops or bottoms, the thing to just focus on is your risk management. If the market is turning against you, depending on what your strategy is, either get out or just start to carve position sizes down. There is absolutely nothing wrong with locking in your profits. And if you're investing, what you want to do is to buy the dip, but you want to do it sensibly and seriously. Those daily cost averaging DCA strategies are really, really dumb. You want a much, much better way, and that's to lean in at structural levels. A big thank you to everybody from yesterday's video. Such fantastic comments, and I will definitely go through them as well. One thing that we can see with the S&P 500, we're still, and this is not the futures, this is just the S&P 500 proper, which just opens up and trades when the US markets trade. We can see it's under a level of support, it's got good bullish momentum, but it's currently weakening a little bit. It is always on the price moves in a, please let me know if you know that last word, price moves in a something or other. To understand price action, we need to zoom in and understand and comprehend where the structure is inside price action. The CTKS method is the world's most powerful structural level detection system for resistance and support, and it goes across all of price action. So when we look at the S&P 500, what happened to the S&P 500? We saw in the start of yesterday's session, it came up and then it came down. Why did it do this? The answer is always the same: structure. There are two ways to get the structure. You can mark up your chart or you can get my indicator. So let's have a look at the indicator itself. Now, what is this telling us? We were coming down into a level of structural support and we rebounded just around that 56.70 mark. We managed to get above it for a time and then lost it, did a whole heap of structural failures, and we're currently below at 56.50. Members of the service, just make sure you right click on this particular area and just update your charts if you're not seeing this back color. The major issue is that we know the markets move between structural resistance and structural support and structural support and structural resistance. The key is just to know where they are. The S&P 500 currently has really good structure around that 5607 mark. The reason that we look at Bitcoin in order to do our timing is because exactly what I showed in the start of this video. As Bitcoin was selling down, it hinted that risk off was entering the markets. In other words, negative price momentum. And we've seen a bit of a break in this initial support line. It's not too problematic at this particular stage because if we come back to 90, that's a really healthy retracement. Even a little bit lower would be fine. And a lot of people say, I only want Bitcoin to go higher and whatever chart that you're in. But of course you want to buy it lower if you can. When sell-offs hit the market, what you will find is all the charts tend to coalesce together. And that's what we've seen just recently. Bitcoin is an incredible risk-on or risk-off indicator. It's something that if you're ignoring it, you're doing so at your detriment. Let's have a look at Bitcoin structurally across about the past week. Now, we saw that Bitcoin has been coming down throughout the weekend and also in the first trading session. We know that everything is structurally biased. So let's have a look at structure and let's see what crypto is telling us. What we can see is that Bitcoin found support, rallied up to structural overhead resistance, couldn't hold it, and is rallying back in the wrong direction. One of the secrets to avoiding perfection is literally to understand that you're going to have structural interactions. If you've got negative CTKS gaps, like we talked about in yesterday's video, price can fall very, very quickly until it hits structural support. At the current time, we've got 3 days, literally 3 days of negative price action. If you're an investor, unfortunately in 3 days you're bleeding or DCAing in. If you're trading, which you should do because trading teaches you timing, intercorrelation, interconnection, momentum, all the things that you need to actually be a fantastic investor. If you're doing that, around structural levels, you'll get deviations that you can make profits from. I want to explain a concept that will really help you out. It's about a humble thing, a push-up. There's a huge difference between consistency and intensity. Intensity is all about going really hard and fast. For example, doing 1,000 push-ups in a single session. Consistency is something else entirely. It's about doing 10 push-ups per day across a year. Please let me know if somebody just did 1,000 push-ups in 1 day of a year as compared to somebody who did 10 push-ups a day across a year, who's done more push-ups? And who is ahead? Is it the high-intensity guy or is it the consistent guy or girl? You might be scratching your head and saying, Ken, what the heck are you talking about push-ups when it comes to buying at around structural levels inside a price chart? Really good question. Glad you asked it. What you can find is that if you make small percentages and you do so on a regular basis, it doesn't have to be every day because it realistically depends what the markets are doing and also your skill levels. But making small percentages, especially in markets like what we're going through now, is a fantastic way to make profits. It's kind of like doing the 10 push-ups in a day. But what people do when they get into financial markets, they want to do 1,000 push-ups at once. And they may well do it and they just lay unconscious after it. As price moves in a wave, it's always on. You can make money in any market condition, but you've got to be serious and sensible about where you put your buys. If you want to enter the perfection equation, and retail trade perfection is absolutely everywhere. Retail trade perfection, or RTP, says you must buy there and you must sell there, and you have to go all in and do at least 1 billion% leverage. or else you simply can't trade. What a lot of rubbish. This is the mainstream media in its desperate fight to just train people into oblivion. That kind of thinking makes you somebody else's exit liquidity. Please don't think like that. Instead, just observe what's happening around structural levels. If you're not getting consistent higher highs, there's trouble. If you have a structural failure, it's going down to the level of structure below. Sometimes you get these fake outs. They can be common. But as the students of the profiting course know, the CTKS method will take you very, very far. We also know that we can't look at Bitcoin in isolation. And don't forget, there are basically three principal charts that you need to look at in the crypto market. You need to look at Bitcoin, you need to look at total, and you need to look at your money chart. But if you're looking at Bitcoin, you should be looking at the index futures, and especially, for example, the VIX. What the heck is the VIX doing? That is a really important chart to look at. But let's just keep it really simple, looking at Bitcoin structure, total structure, and the structure on your chart. If we look at total crypto market cap, we can see the market of crypto came down. This is literally total crypto market cap. It went from about $3 trillion to about 2.9 trillion, lost 100 billion. What we need to understand here is what is the structure underpinning all of this price action. Price action is good, but structure is what you realistically need. We can see and we know that Bitcoin lost its own structure. Total had a lot of structure underpinning it, and it's been grinding lower and lower continuously. Now, this means something pretty important. We have a GW or gravitational well up here in total crypto market cap. So that's actually a good thing. We may see a retesting of this area. Gravitational wells will attract price back into those regions. Especially when they're above, we like it, but when they're below, we don't like it so much, unless we're buying. But one thing to note is all of this structure that's occurring around that $2.86 trillion mark. That's going to be vitally important to see. And what we've seen just recently is there is a degree of retracement inside the market. We've not broken out to any extent, and we realistically need to get above this $2.92 trillion level, which corresponds to this area. You will see this playing across all of your price charts and your analytical charts too. One of the things is that you don't need to wait for perfection. Perfection doesn't exist. Perfection is really, really expensive. It will keep you out of price action when you could profit, and it will pull you into the market as you're about to lose money. Perfection is your worst enemy, and it generally happens because people seek to time the bottom and seek to time the top, because wherever they look, everybody's buying the bottom and selling the top and not showing their trade history when they do so, which basically means they're full of something. Please let me know what that could be in the comments. Something that can really help you break out of retail trade perfection, which is a consistent losing strategy, is to just think perfection is rubbish. You must instead participate and have lots and lots of trading rules that helps you to understand how the market works. Having been inside financial markets for nearly 4 decades, I'm really happy to share my rules with you each day. If this is helpful to you, just let me know in the comments. And if there is something that you would like me to focus in on, please let me know. I'm here to help. It's quite a good idea to keep your eye on gold. Gold has been moving with the VIX, so if you see gold coming up, this pretty much means that the VIX is coming up as well. If the VIX is coming up, this also means that we anticipate the crypto and the stock market is coming down. But even gold cannot escape the structure of the market. So when we look at gold, we need to understand what's happening from a structural perspective. Are we passing? Are we failing? We can see that in the past trading session, gold did really, really well. It reconfirmed the 32.39 structural resistance as support. It broke through that 32.70 area and confirmed it as support, did a real big cut through on that 32.94 area, and is just playing with the structure just under its current price of 33.32. We can see that we've got a bit of a positive fresh air gap here, or a positive CTKS gap. What that typically means, as you've been aware of, is that it can move the price chart. If it has one of these positive gaps, it can move very, very quickly to fill it. We've seen that time and time again. But of course, structure is the ruler of the price action universe. So 33.80 will be the level that you need to watch for gold. Now, if this gold bull run continues up here, what we're basically looking at is the VIX is coming up, and we would expect negative price action in the crypto space and in also the stock market space as well. Don't forget that gold, whilst it can go up, it will eventually coincide with risk on or risk off sentiment. A big thank you to everybody who commented on yesterday's video. Some really good comments in here. J-Link's plan, and this plan is all about how you prepare in terms of 3 dimensions for price going down or price going flat or price going up. When you hold one particular concept, the price will in all likelihood go down. For example, plan ahead, says J-Link. Also, never go all in, and figure out your boundary in which you get an invalidation case. Really good stuff. Well done, J-Link. There were so many fantastic comments. Please make sure that you have a look at them. Cashflow Shift said, no alt can escape Bitcoin's gravity, so check out what Bitcoin is doing. Make the decision to BORSOG, buy on red and sell on green. And wait for market permission. This is a really, really important point. If the market is not giving you permission to profit, you will not profit. Well done, my friend. Michael says he's always scaling in and out of positions, looking to make sure that he can take advantage of the gaps, monitoring broader positions, say from the cheat sheet, and adjusting accordingly. Our CTKS family is absolutely incredibly good at borsogging, which is buy on red, sell on green. And thank you, Michael, for the term. What the heck is the bee's knees anyway? There were just so many fantastic comments. I don't have time to read them all, but please have a look through. And Peter said, I reset with my cheat sheet if price moves against me. And TF Theta has said it's all about 3D risk management, prepared and not scared. In yesterday's video, I was talking about mastery of fear, and Purpuratum has absolutely got it nailed. If price moves against me, I get pretty excited. Wow, legend. This is exactly how you want to feel. Thank you, Purpuratum. This is beautiful stuff because I have more buy orders below the current market level. Purpuratum always has dry powder on the side, and that is really important. And he's always ready for 10-5-10 events. You can find out more about 10-5-10 events on the Coffee Club. It's a free video. And from a technical standpoint, I can only win because I know the market moves in waves and sharp angles reverse. This and all the knowledge from the CTKS Method Level 1 and Level 2 certification is truly a license to print money. Thank you, my friend. A really, really good comment. And there's so many fantastic comments in there. I just wish I had more time to read them all out to you. And Level 1 and Level 2 standard certification is all about drawing those lines, the most statistically significant lines in existence on your price action charts. Those are what I share in the daily video. If you would like to get the cheat sheet, which is available absolutely free of charge from the homepage of ctksmethod.org, just log in to ctksmethod.org, scroll down until you see Mastering Price Action. And this is the cheat sheet. You can just download it here and fill it out. It is an absolute lifesaver. And if you scroll down a little bit more, you'll find the official ticker list for the service. Just clicking on that will show that the VIX came up last trading session, and that's exactly what caused the markets to retrace. You can read the news, you can look at a lot of headlines, but we go straight to the source of the news. The news always reports on price action movements. Purpuratum's comment was incredibly good. All results come from the mind, and a better mind creates better outcomes. If you're getting excited for price drops and you're going long at spot, you are on the winning side because price is always moving in a wave. Purpuratum does this with knowledge and also with skill, but the positive attitude is incredibly important. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.